Hi, Ron Benning here with a Sacramento Duplex Market Update for the period ending January of 2025. I will look at the key local and national market trends, and I will tell you the target GRM that will break you even, making finding the best duplex deals dramatically easier. Developing trends leave evidence. If you want to know what's likely to happen, watch to the end. January 2025 was a neutral market for duplexes in the Sacramento area. We currently have a 4.2 month supply of duplexes on the market. This is up from 2.8 month supply last month. This is a pretty significant shift. The 4-month downward trends in the number of active duplex listings in Sacramento was broken, with an increase of inventory of 35.8%. This in large part is due to the fact that after a 1-month break, the downward trend of the number of sold duplexes has reestablished itself, with closed sales down 26.1% in January. Pending sales remained stable during the last month compared to the previous month. After a near alignment in buyer and seller expectations a few months ago, we are starting to see an expectation gap forming between what the sellers are wanting in their asking prices and what the buyers are actually willing to pay. As you can see, the average list price is neutral or slightly up, while the average sale price for most of the last 6 months has been trending down, except for a brief spike a few months ago. So what's causing these trends? I believe it's what's happening in the mortgage market. That's the primary driver of these changes. Interest rates have been going up for the past few months. In fact, despite the Fed's 0.75% rate cut since September, rates are actually higher now than they were last year at this time. At the end of January, rates for duplex loans were around 7.44%. Now, for around 18 months, we've been getting these little teaser messages constantly about the fact that rate cuts are just around the corner. At this point, I'd really take any rate decrease talk with a grain of salt. And here's why. Right now, rates are 0.18% higher than they were a year ago at this time. But more importantly, the most recent inflation numbers showed that inflation as of December 31st was still at 2.9%. This is well above the Fed's target rate of 2%. Now, it's much better than it was, but this is likely to result in rates not improving much in the near future, unless we see a larger downturn in the economy or the inflation rate gets closer to the 2% target. Let's take a look at how current rates affect the target GRM for a break-even for a duplex with 25% down. The current break-even GRM is about 11.7. In January, the sold price as a percentage of the original asking price was 99%, which means that buyers on average only have about a 1% bargaining power. With so little bargaining power, it's clear that most investors will have a very difficult time finding a duplex with a break-even cash flow with 25% down. The average days on the market for sold duplexes was only 25 days this month. More importantly, for the unsold inventory, the average days on the market was 56 days, up 4 days since last month. If you're enjoying this analysis and you're not already subscribed to this channel, please subscribe now so that I can keep you informed about investing in the Sacramento market. So what's likely to happen over the next month or two? I'm making a prediction that rates will continue to be stagnant over the next month or two. Rates are going to be the key driver of the duplex market in Sacramento in the coming year. Now, I am optimistic that we'll have lower rates by the end of the year, but only slightly lower at this point. If you're waiting for 4 to 5% rates again, This is just not going to happen. If that is the case, I predict that inventory will go up a little bit over the next 30 to 60 days. That's what I predicted last month, and it played out just as I had predicted it would. I believe pending and sold numbers are likely to remain stagnant, and I don't see any major market changes over the next 60 days. For potential sellers, we really need to watch the inventory levels closely. If they rise and sales don't keep pace, it could hurt sales a few months down the road. List prices should be at or below recent sales, as is evidenced by the earlier average sale price chart. If you want a rent analysis or an update on your property's value, look down below for a link in the description. For buyers, I wouldn't be expecting rates to come down much anytime soon. The best strategy is just to target those best deals and act quickly, realizing that right now, investing in duplexes is a long-term play. Whether you're thinking of buying or selling in the next 7 days or 7 months, feel free to give me a call, send me a text or email, and I can answer all of your questions, and I'll help you plan a smooth purchase or sale transaction.